Welcome back, everyone, to Not Your Advisor with NYU Grad on Monday, April 29th. We have a lot to cover. Let's jump right into this. But I do want to start the day with breath readings. We had 215 new highs versus 87 new lows. 69% of stocks were advancing versus 28% declining. About 60% of stocks are below their 50-day moving average, and 39% are below its 200-day moving average. The complexion of the day was quiet until 3 p.m. and Tesla all day. Just taking a look at SPY volume, because in the afternoon at like 2 o'clock, we were only at like 20 million shares traded, which is like a 70% shortfall of average daily volume. So today we traded 40 million shares. Average volume is 72 million. So a little over half the volume on this Monday. Now, that's not, a guide, but it's one of the things I look at, right? Like, was there any oomph in the market? Was there institutional support? And obviously, it was a slow day. Felt like a holiday, to be quite honest. However, Tesla had reported pre-market that they were pre-approved or pending approval for robo-taxis in China. I'm a little skeptical about this headline, to be quite honest, but let's keep peeling the onion. So we had that going on. We opened up hot from that, and we pretty much sold off individually one by one on a lot of the Mag 7 throughout the day. Let's see. Google lost most of its earnings pop. Like it's lost half of it already, and they reported on Friday. Friday. Is that right? Damn, that happened quick. Microsoft lost all of its earnings pop from last week. And the other bit of news that was all over Bloomberg was the yen and the yen carry trade and the US dollar and all the pairings. So I can probably talk about this for hours. So I'm going to try to do a good job summarizing it for those that have never heard of the yen carry trade, or what does that have to do with the markets. So I'll post a little blurb, but basically it's when central banks and institutions borrow yen or short the yen, because they'll borrow yen they don't have. So it's a form of shorting it. And they borrow the yen and they buy securities, risk assets, in other currencies like the US dollar, in the British pound, and they'll fund the stock market and treasuries and bonds. And that is a carry trade. That has been going on for decades. So shorting the yen, taking the proceeds of that money, converting it to US dollars, or taking US dollars or British pounds and buying the indexes, buying whatever to make asset prices rise. The problem is that, for all this time, the BOJ in Japan has been a willing pawn in this, and they allowed it, right? Because on one hand, Japan exports a ton. They export cars, TVs, electronics. And if their currency falls and our currency rises, it's cheaper for us to go buy that Toyota, to go buy the Sony or the Samsung. I'm not Samsung, that's Korean. You get my gist. Or Japanese whiskey. However, it's a problem for their citizens, because if you live in Japan, you want to buy a home or you want to buy a Big Mac, everything costs more money. And they have been put into this bondage of inflation for so long that the BOJ is now threatening or has hinted that it might need to allow their uh, currency, the yen, to rise. And one thing that Bill Carrots taught me over the years, in the beginning, it made my head spin, is how everything has an interrelation. You pull one string and something else is going to happen on the other side. And so think about it, if they allow the yen to rise, that's basically unwinding the carry trade. And not rise for a day or two. I'm talking about structurally letting the yen rise for months, years on end to help with inflation. If that happens, it's unwinding this carry trade. And if the yen rises, you would have to also assume the US dollar or the British pound will fall in a pair, right? Because if they're a pair, one goes up, one goes down. So if the US dollar falls, the yen rises, then stock markets typically must fall, because how should I explain this? I mean, for those that understand this, I'm sorry for having to explain it, but there are folks that have never heard of this. So if the purchasing power of the US dollar falls as the yen rises, it takes more of my dollars to buy Apple stock, right? So this is where it gets confusing, because that should be good for stock prices. But because the funding of the whole system is partially funded by this carry trade, all of that liquidity reversing itself is bad for the market. So I suspect central bankers are really looking at this yen situation, and the FOMC minutes are coming out this week. So my suspicion is that gold, silver stuff, Bitcoin stuff is going to be put to the side for maybe a few days, so they could focus on this yen pairs issue. So that's going on today, if you didn't know. Let's keep peeling the onion here. So a couple housekeeping things. I'll save that to the end. What stuck out, Meta is still down. McCall, the Republican senator, the congressman, his positions are still underwater from the whole TikTok ban legislation purchase. What was strong today, you had consumer cyclical, utilities, basic materials, real estate, industrials, healthcare, energy, tech, all in the green, but tech was only up 0.18%. You had financials down 0.28% and communication services down 2.06%. Keep in mind, Meta and Google are part of communication services. What else did I want to cover? So yeah, the housekeeping thing. So for free members, there's a link that I share with the premium members on some like the resource links. There's a new one from True Rate of Unemployment figures. This tracks the U.S. labor force, those that do not have a full-time job of 35 hours per week, but wants one, or has no job, or does not earn a living wage considered as $25,000 annually before taxes. And if you look at the data that way, the rate of unemployment is 24% in America, not 3.8%. So I will link that in the free part of the show notes. The housekeeping items that I wanted to share was I am going to walk back the whole testimonials offer, where if you submit a testimonial that I use, I would offer a 30-month comp. One of my premium members was nice enough to email me and say, hey, that might be considered a paid testimonial. And he's absolutely right, because that wasn't my intent, right? My intention was, wow, all these folks gave me their testimonials. I asked them if I can share it publicly. They said yes. So I gave them something as a thank you. I gave them 30 days of comp. at the end of their subscription plan, but it's a little different if I'm offering something in exchange for that testimonial. So I'm gonna walk that back. But if you would like to still share a testimonial, just send it my way. There just won't be a comp in exchange for that. Also, a paying member emailed me something that I wanted to share because that was the whole intention of creating the podcast section of the Substack. When you're following the stock market and you subscribe to many newsletters and podcasts, there's no time anymore, right? Especially on the podcast side, because a lot of the financial content out there is like over an hour long. It has, commercials or sponsored content, and it has, the host going into political tangents and their own opinions. So I was searching for something that I can listen to in 15 minutes if I missed the day, what happened, what was important, and not be inundated with ads and politics. And I couldn't find it. So I created the podcast, and one of the paying subscribers, I'm just going to say his initials, FB, he wrote, "Hey, I hope you're doing fine. I got your podcast and email downloaded right before taking off a flight to Asia on Saturday, and I was really happy to have it, to listen to it on the trip. Thank you very much for useful updates on gold stocks and the overall market," end quote. And that's the whole reason that I created this. So I'm so happy that you all are using it in that fashion, listening to it, walking your dog, or having your cup of coffee and breakfast in the morning, or on the plane because you missed today's action or there's no Wi-Fi, you download the podcast and you listen to it. Like, I'm so happy to hear members are using it that way. So that's that. I've added a new page on the navigation on top called Binge NYU Grad. So for free or new members, if you just wanted to go down the rabbit hole of the most popular posts and podcasts, I've curated that there. There is both free and premium content. There is a discount code for annual billing option available to you there. It's 20% off, so check that out. But that's really about it on the free side. Thank you for tuning in. I'll see you all after the Tuesday session. Things to watch for: you have Amazon reporting tomorrow on Tuesday, you have FOMC and Jerome Powell speaking on Wednesday, and you have Apple reporting on Thursday, the most dangerous stock in the world for bulls and passive investors. I will see you all after the Tuesday session. Premium members, please stay on.